This is Michael Robbins. We're taking a look at how the market is digesting the coronavirus and the protests, some of which have become violent and destructive. It is in the early morning of June 3rd, 2020, and we're creating a record here to see how the analysts are interpreting this information and how well they're calling the next market move. If we look at the futures, they're set to have another good day, but not everybody thinks that's going to happen. So over here on Yahoo Finance, um, not too much general information or opinions. Um, Always interested in what the housing and real estate markets are doing during this. Largest monthly fall in 11 years. Um, so prices fell 1.7%, and annual home price growth got cut in half. So it sounds like there's still growth, just growing slower. Now, if we come over to Seeking Alpha, this is what I felt to be the most informative. They cite a lot of old data, but note it is June 3rd, 2020, and describes the way that the market's gone up as too fast and too furious. And you can see one of the charts down here where we are here today, um, a massive correction or crash, and an incredibly strong rebound that has baffled quite a few of the analysts out there. So um, this individual is talking about this classic conditioning, um, like Pavlov's dog, in training the market of potential stimulus associated with a neutral stimulus, and saying that this was established back in 2010 um, with quantitative easing being the neutral stimulus, and this preparing market participants for potential stimulus, and then that actually being the rise of the market. So he says, back then the didn't work exactly as anticipated. There was a market reaction, but that stimulus did not turn into um, substantial, market benefit, economic benefit. Um, Says, it's still a bull market. I mean, as these things are defined, um, which is pretty interesting here. Um, but says that may be in the process of a topping pattern. 2008-2020 peaks are forming the left shoulder and head of the process. I mean, this is really talking about technical analysis and how you look at that chart, and establishing tops and bottoms. A market peak without setting a new high that violates the bull trend line would define a bear market. And he's saying that this Fed liquidity is it's slowing down a bit, and and essentially believes that there's going to be some um, market deterioration as a result of it. So pretty fascinating piece here. In a previous article on Seeking Alpha, it was noting the price earnings and price sales ratios looking forward 2 years. And there was Amazon, Facebook, and a couple of the other candidates. Two were overvalued, and two looked just fine. Um, so yeah, I mean, I might believe this, that we're about to have some earnings announcements, which are likely to be awful. unless you're Zoom. And whether today's market is really thinking that they're going to be better than they are, or maybe thinking, yeah, we're going to have a wash, but things are going to get back on track here soon. So let's have a look at a couple others. Um, n- this is good news that the protests are the calmest in days. Very good to hear. Um, that might give some market confidence, but we'll see later on that um, the or is it um, somebody looking at right here what history can tell us about how the stock market reacts to civil unrest. And essentially it's saying, as horrible as it appears on TV and being alarming and important, it's unlikely ongoing arrest will have a material impact on financial markets. And saying, historically it hasn't in developed nations. um, the Jim Cramer saying that the market is blind to social justice. Yes, but it isn't blind to actual economic impact, and it's probably not seeing a few stores looted as being material. Um, so this could be a little different, right? It's looking at how the markets reacted to civil unrest in the past, but today we've got the COVID on top of it and mass unemployment. And so, could this make civil unrest more severe? Um, yeah, potentially it could. So, um, everybody's talking about why are the stock markets going higher with massive unrest across America? Um, and that may be why is that the markets don't see it having a financially material impact. Now that's not to say that COVID isn't financially material. So this may be overtaking the coronavirus as the market's risk. It's talking about consumer spending and how savings is savings is up the most that it's been. Um, Personal savings rate hit oh gosh, it was 33%. Um, and saying that, we can get this recovery if people start spending. But that remains the question. And, I mean, obviously it's still kind of related to coronavirus and, the lack of spending. Um, this is true. I've got a friend in Australia. We talk about this and how they've they haven't had a technically defined recession in 3 decades, um, and looks like they get to have their turn. Um, Maybe a few more down here. Um, So yeah, and we're still getting some pretty serious bear warnings um, that could cut economic output by 3% this year and 2030, or a loss of almost 8 trillion. Um, and so we're still hearing what some pretty serious figures. I mean, 40 million Americans out of work. Um, it's and then we've got ongoing debate from the U.S. Congress about a new stimulus plan. And so, to the extent that uh, the market's got a read on which way that Congress is going to go. Perhaps they're optimistic that that's going to happen and it's going to continue to support the recovery. But yeah, the market is not necessarily tracking the economy day to day. It's anticipating it, and it's making daily corrections in that. So we're going to keep making this record and seeing how things actually shape up. Um, the last thing here is talking about the 50-day moving average is pushing records, and whenever this has happened, corrections were close. So perhaps we have seen the end of this rebound, and we're going to get another correction, but at this point, this rebound is so strong, it's really hard to see it going down even further. In fact, there was something I believe from Goldman Sachs that had recently declared that we were headed lower, and they've walked that back a bit. I'm not seeing that headline, but